Now, the most important is, of course, is our stop losses, right? So if I have objectives to on an ES to grab 4 ticks, it's very conservative, but 4 ticks is always guaranteed. You may say is actually from the practice is like 6 to 8 ticks on an ES now with the volatility that we have now. Now, but on the MNQ or NQ, it is a 6 to 8 and practically 10 to 12 ticks with this with the current volatility. Now I'm putting my stops at 40 ticks and then with the ATM and then immediately reduce it to 20 because I need the more room for price to not to kick me out of the trade immediately. Okay, now this is the qualify. Yeah, hello. Okay. So if somebody want to say, please welcome. Or if you don't, then just mute yourself. Okay, so then there's like a 4 qualifying factors. Okay, 4 qualifying factors. Uh, Number one, I mean, what it is, volume size, right? Volume size, I call it abnormal. Then history or time, I put the word longevity, but I realize longevity is maybe not your favorite word. Some of you, maybe foreigners, is like, what's the longevity? It's basically age of the order sitting on the price level, and then proximity to a large orders, to the queue, when it's going to be executed, how soon it will, and I'm going to show you details. And then another factor is a speed and creating a imbalance with the speed when the price is striking compare versus to coming very slow in a range to your large price level. Okay, let's go into the details. Do you guys seeing this slide? Let me make it larger. So for example, you see what I'm saying abnormal. It's a priority factor for me. Okay. Like if above there's like a 8, 11, 10, 18, 10 again. So then I multiply average of this on the 10 and I see that this particular level, by the way, you probably don't see my mouse. Do you guys see my mouse? Let me see it. Yeah, you don't see my mouse. Huh. You don't see my mouse. Oh, jeez. Okay. Okay. On this slide, but you need to see my mouse. What's going on? Why it's not showing? Let me maybe it's gonna be in this mode. If I do it this way, oops, it's projected on another screen. So I don't know. Sorry. So, see, I'm sorry because I changed my motherboard last night and I changed 2 of them. And I just like installed this on this computer. So the Windows and so on. So anyway, uh, why? I want to show you my mouse because my mouse. Do you guys know why the Discord is not picking up on my mouse? Do you guys have an idea? I'm like not really picking up unless what's going on. Maybe if I convert it to the PDF. No, I already showed my. Because it shows the windows. Okay, just a second. Okay, here we go. I'm gonna do. Where is my sharing? Stop streaming. I'm gonna stop streaming. Change stream. Okay, change stream quality. Application. No. Oh, okay. Entire screen. Okay. Here we go. I think you will see it now. Here we go. You guys see my mouse, right? So I'm gonna make this picture larger. Yeah. Okay. Here we go. Okay. Oops. Anyway, how do I switch to the next picture? Oh, freaking. Just a second. Sorry. So now there is a 4 qualifying factors that we really want to focus on. And one of them is having abnormal size of volume. Like over here, you're seeing that this one is 18, 11, 10. So in average, it's like 10 to 12, let's say, right? So I multiply it by 10, it's going to be like 120. So this one is very close, like 93. So I can choose, okay, this is abnormal because it's close to the 10 times. This one is 65. No, it's like below 10 times. And this one is 344. Which one is abnormal? Of course, this one stands out from the ones that above and below. Even, yeah, there's a some like 26 over here. I see that too. But this 344 is probably going to be my peak out of these three. Now, let me say a little bit different now. I'm going to switch because we're not just mechanical robots that we're looking at the numbers, right? If the same situation is an Asian session, and it opens pre-market, right? It's Sydney, it's not even Tokyo yet. First 2 hours, 93 on NQ or MNQ, it's pretty good level, a pretty good volume size, pretty good. The price probably gonna get reaction from this. So it's really depend on what? When you open your session and you study that session, what is price doing? You look for the 2-3 days at the same session ago. Okay, 2-3 days ago. When you look and you make analysis, then it's gonna click with you because today's volatility may be not the same like before. Okay? And the strength of the market, you can say it like I am saying it that the price have a wheel. The price have a decision. And when price decided to go in a certain direction, nothing gonna stop. Nothing. When the price decided to go another direction, nothing gonna stop. No any kind of level. But what we trading like in this method on an MBO is price reaction. So now this is the second qualifying factor, by the way. Yeah, you're seeing it actually now. Okay, now this is the second qualifying factor. It is what? It is the time when somebody put their order. The more orders, by the way, the more orders I see over here, because this one is a large one long, large order. That's what MBO let us do. Let us see. We can see that how many orders out here. We can see, okay, there's somebody is 10, there's another 10, there is like, this is what, 50, okay? This is 50. Here we go. Okay, now, thank you for saying. So we stopped at 50. What does that mean, 50? Now you guys hear me, right? Okay, sorry for this, okay. New computer, okay. So what's 50? Volume 50. Oh, okay. Oh, okay. Right over here, look at this, okay? The qualifying factor number 2 is the time that this order spent on that price level. This abnormal, totally abnormal. We're seeing on the MBO, there's a volume total, and this is abnormal, right? But this one is 50, then right of it in the Q is 10, and there is another 10, and over here it's a 3. So this one big, large one have a danger to remove themselves because they may be attracting the price to itself, but they spoofing, they will flip, they will take it out in the last second or millisecond when the price is going to approach this. If this is the one big, large order, then it's like, yeah, I like it. Like this one, look, this one is below, very below, it's 175. It's a humongous, okay, humongous. But it sits there for a long time. So there's a factor how long it sits, like this one, you see it sits for a long time, longer than 2 above. So I give my take is probably on this one, the red one that sits there for a long time. If this person is serious, especially on an Asian session, I see that they kind of like less playful to compare with a New York, where the cheating is more common on a New York, let's say, or London. Okay. Now, this is like 300. What is this? 344. 344. The bottom one. 344. So this is total 93. This one is 65, but sits longer than the previous one. And this one sits longer. So this is the two factors. Actually telling you two factors while I'm saying one. Time, historical time that the order is spent waiting until the price key coming over here and gonna execute it. Okay. So if they spending long time, yeah, that's a good factor. But also, if there is the more the different individuals or different orders sitting there, not just a one big large, because when one big large remove themselves, then what's going to happen? So you need to be careful. You need to cancel your order, right? Too short or too long. You need to be super careful. So now that means that qualifying factor is time it's spent. And that's why we have tick charts. Yeah, you can use tick charts. I use ticks. I use range. I use time. Time is not necessarily should be the only time frame. It's related to anything. Okay, and now, this is qualifying factor. Okay. Now, then, so you simply like analyze it 2-3 days or before ahead in the same session and notice on the heat map. That's why we can record the heat map, by the way. This is unique function. So we can record the heat map and we can take a look where the price bounces from. I have hundreds and hundreds of images to actually let me go. I mean, I can show it to you. I'm like, I have thousands of images because yeah, okay. I would like to make analysis, and I notice from what price level the price bounce. Okay, on a different instruments or tickers, it may bounce in different sessions from the different price level or volume order, let's say. Okay. So you just what I do. I mean, I share with you what I do. Um, look at this. Look at this. Do you guys see this chart? I collect statistics. So by collecting statistics, you're getting what? Experience. And I record. This is what I do before start trading. Make analysis. So become smart. Take a look. What happens yesterday? What happens today? So I record what volume size it was. The price reacted, and the reactive price is, let's say, 50 to 70, while abnormal 300 to 500. I forget what it was, NQ or ES. Anyway, so I noticed that there's like a two type of kind of volumes. One, it's like price get reaction anyway, and it's not like a humongous abnormal volume. But then I record about abnormal volumes. Then I record, okay, how many times during that Asian session, let's say, or whatever session you trade, the price reacted from the 50 to 70 and from the abnormal. Of course, there's a less abnormal, but what we do when we trade, when I say 100% method, why it is this 100%? Because if you strip away all other chances, you get like 100%, like the highest chance possible, then you're probably not gonna interested to trade anything else unless in your career. because you can make. I was watching an interview with the one guy who makes like an insane amount of money. By the way, he maybe some of you watched that interview. He trades without the stops. I'm not saying you should too. Uh, but he makes insane amount of money, and he trade only resistance and support and resistance. Basically, that's what MBO shows. Okay, that's what he trades. Now, I'm not saying that it's a good idea, but he trade only one simple setup. He's saying, guys, it's so simple. And he makes like insane amount of millions, not a million, but millions. Okay. That's him. I'm not saying he's right, because everybody tell you if you trade without the stops, then you're gonna lose account. Okay. There's some probably rules that he has. He has a limited amount of money on the account. If you lose this one, it's just a fraction of what he has on another account. So there's a different ways to protect yourself. But anyway, what I'm saying is he's trading simple. And now with this 100% method, why this method is 100%? Because we're stripping away or other complexities or other variations or other co-influence factors, because I can share with you co-influence factors, but it's going to be a next presentation. It's going to be next level, let's say, because first we need to start to learn how to walk after we get out of the space. So if you're coming back to our planet from the space shuttle, whatever, you spend like a few months on the International Space Station and you're coming back to the Earth, you need to learn how to walk. Okay? Because our brain, okay, I'm not going to preach long about this. Our brain, the function of our brain is we not seeing. Our eyes is not kind of like, we don't see the other object or people in front of us. Our eye send us a signal and we reconstruct the model of what we're seeing inside of our brain. So when we model this simple system, that's my point, we can then extend it to something more sophisticated and more like, with more co-influence factors, and added more scalping into that. Okay, now this is what, do you guys see? Make a screenshot if you wanted to. Okay, this is just an example. Because this is the answer on the question, how do you predict if the price is gonna hold or not? How do you predict it? If you don't look at the, don't have enough experience of watching, looking, screen time, eyeballing, then I'm powerless. Because on a ES, last week, I was doing 100% every single day. I was so tired. I showed it with some of you guys. I'm getting again, but I don't trade every single price level. I don't trade every single thing that looks great on MBO. I skip it. So when you do it selectively, you can get 100%. When you do 100%, you get your self-esteem, not self-esteem, you get your confidence level so high that if you trade only conservative setups, then you're like, this is the beauty. But if you hands like kind of itchy, you want to click with your mouse like compulsively, like here and here and here and there, yeah, you're gonna kill your future. You're gonna have so many questions. So my answer to how to predict, study these parameters that you're seeing on this chart. Okay, I'm gonna show you some more other qualifying factors. Okay, make a screenshot, guys, because I'm not covered in my conversation all of them. Okay, okay, that's a good question. Now, I'm gonna talk a little bit. I'm gonna add a little bit more than I previously spoke about it. Okay, so now that was a second qualifying factor, the time, and another factor is actually speed and imbalance. This is quite interesting. This is fascinating. Even you say, hey, something new on this slide. Okay, Who are familiar with the with such a setup that you're seeing on this very slide? Who can say, "Oh, that's very understandable"? Who can slice it and say, "Oh, there's some details. I need to next time. I need to take a more careful look and notice those details." Could you guys share with me? Do you still hear me? Hello? Yeah. So, the Michael, what do we see over here? What what do we see over here? What kind of details that may qualify or disqualify this setup or this situation? Let's say I'm not challenging people. Okay, I'm simply saying that if you don't know what to look for, how you can um it's still my attempt to answer, can you predict what level gonna hold or not? Yeah. Yeah, thank you. I appreciate it that you step in. Because there is some people who are shy. I'm a very shy person, by the way. You will never hear me talking anywhere else because I'm totally shy. I don't know. Will I fit in? Will I say right? Will I say smart? And I'm like, dude, I'm not that smart. I'm not that sharp. But it's actually misleading. Look at the next slide. Look now what's to look for. First, that's the same situation. You see the range over here? I highly recommend from the very beginning to draw boxes. Boxes, guys, boxes. In draw the boxes around ranges. When you see like this horizontal range, simply to say, uh, uh, I'm still online. This horizontal range, okay? What it is accumulation. The on this slide, we can see that the price is moving from the top to bottom, then range, and then swing down. Now, the longer this range is, the better accumulation it is, especially even on a day candles. 1 day candle, 1 hour candle, 30 minutes candle, 15 minutes candle. This is just like, this is where when I made my biggest money, guys. One day I was sitting on a euro long time ago, and it was accumulating for the like couple days like this. And I knew it's gonna be ended up with this, what we call the impulse. The other word to use for this long candle is extension. Okay. And with this extension, what do we see in this extension? We're seeing irregularities in order matching. We're seeing the red bubbles, 3 of them here, 1 of them here. There's a red bubble. And then, by the way, this white line, that's where I put my entrance into long, okay? That was like a 68 to compare with this 30 and 30 and 30. That was obviously on an ES Asian session, okay? Now, I put my order right above this white line, 1 tick above. So now, long range, the longer the better. Usually, or quite often, end up with that extension. It's a fearsome extension. It's a very short time. This is a 30 seconds time frame, right? But on most of my slides, it's a 30 seconds time frame. But it was really freaking fast and furious because of the accumulation in this range. Some people who scalp, they can even predict by the what they can see at the very beginning of this extension. This is the of the impulse, okay? They can say, "Oh yeah," and what they do. By the way, let me. If you're seeing my mouse, by the way, I can draw it. Could I draw? Yeah, I should. 1 second, I can draw it. 1 second. On design. No, no, no. Insert. Where do I draw? Okay, I should. Uh, home. So, I don't know. I shouldn't be able to draw it. Anyway, you're seeing my mouse. Look at this. If we go into the details, which I don't want everybody to go, I'm simply telling you that there's a more behind. You see this red, and there's like small candles over here. Oops, sorry. That was another idea. Sorry. Usually, if this green is kind of higher, and then it's going on this range, and then it's kind of like really smacking down fearsomely with the strength and power and the speed. Okay, now some scalpers who are more experienced scalpers, they know right over here, that they are ready to short. Yes, there's a strong level over here, but I'm not telling you need to do that. But in the future, maybe. Okay. So this is the extension. This is what's called imbalance, because the trading over here, the orders are only like red, sell. Where are the buyers? Okay. So this is why it's called imbalance. You guys know what's imbalance is, I hope. And so when it's created imbalance with the really short period of time after the range, you can call it order block. For example, you can call this as order block if you like the price action. That's exactly what it is. And you see it comes out really fast. Smack into this abnormal level. Okay. Abnormal level. When true, it's a false break. Okay. And then bounce it back. Look at this. Yeah. Okay. You see that? So it went through this 68 volume level, and that's where my order was. I've got 12 ticks in negative. But the idea here, why I'm showing you this construction, this is the range, horizontal. This is the vertical box, okay? There's impulse or imbalance, and then the price. I'm explaining you mechanics, why we should expect to grab 6 to 8 to 10 to 12 ticks. It's like guaranteed. This is the setup, because the price usually come back to fill out this imbalance. Practically, price, when it's went through, price created this imbalance and coming back sometimes to these red bubbles or sometimes to this range. It may come because there's a no volume over here. There's like a zero volume. There's even one small teeny green bubble. You don't see it. Okay, right here. That's amazing. And there's a one small teeny red bubble inside of this candle. But the price is, and everybody knows this, the price is coming back to fill out imbalance. So bounce to fill out imbalance. The bounce from my price, from about normal price, even we went through. Here's a situation what actually happens. The price came out from over here, fearsomely, strongly, and then made 12 ticks, false break, and then bounced 25 ticks up. Now, what you can do, you can be smarter a little bit than me and put your price, put your long right below this volume. The longer this range, then it's be much less risky if you start your long below this volume, below this white line, volume 68, abnormal, for that time and for that session. Okay, so boom, you can put it below. You don't have to put it above. Okay, so but it depends on your experience, because if price sitting here in a long range, the longer it is, the more it accumulates, and it may get just as kill everyone on its way. it went through all of this, like 30, 35, another 30, and it's just like in a blink of an eye. Yeah, that was a live situation. Okay, I actually recorded it on video. And then all my slides actually from recorded video and a live situation. Okay, now look, it's not hypothetical. So the price went through 12 ticks. I told you that my stops usually like 20 ticks, right? By default, I put them at 40, and then I instantly like go and adjust them to 20. And then you see the price grab the 25 ticks on the way up. Why the price bounce it? Now, there's two factors, and that's my point. Even though you're like thinking, oh, we're trading the large volume, abnormal volume over here, right? Yeah, that's a one factor. And the second factor, because price needs to fill out this gap, that is the second factor. That's why this setup is just like perfect. Okay. So there's a more than one reason why prices bounced, because it went so fast in a short period of time, didn't get opposite orders on its way, created imbalance, and that's why when it smacked into the passive buying order sitting in the white line over here, and after that interaction, price went down, but there is some people start buying here because they saw that this white line 68 on a passive side was buying. So the market joined a passive orders, passive momentum, because they knew the momentum going to go higher. So the people on a market side start buying as well. So there's the third factor here, if you wanted to. But I don't want to make it sophisticated and complicated. But it's basically a mechanic what's actually happens over here. Now, next time when you're going to see it, you cannot unsee what's in front of you on this slide now. Okay? So this is 25 ticks. But guys, I told you, could you guarantee 4 ticks out of 25? Could you guarantee 8 ticks out of 25? That's why this method is 100%. Because we overcompensate. We trade conservatively to get experience, and then when you grow your account, you can grow it into the millions if you trade just really conservatively certain setups like this one. Do you guys like what I'm sharing with you or not? Yeah. Thank you, Michael. You are not in bed. You should be in bed. I forget about my avocado. Yeah. Oh, yeah. I know I'm talking with you like I'm talking with the kindergartens, but believe me, if somebody a few years ago explained it me these details, oh man, I'll be so thankful. For some of you, I'm chewing my avocado and drinking my coffee. For some of you, it is obvious. But it is obvious until somebody sits with you and you look over shoulder and somebody is telling you, here, what you need to look for. Here, what you need to look for. And now you're absolutely confident. Yes, you knew that, but now you're confident you're looking in the right way. Okay. Now, this is this is very opposite. It is the slow range. This is the slow range. I tried to find the I trying to find the pencil. Why I don't see this freaking pencil on this PowerPoint? Design. Okay, I will do it later. But there's some ranges. It doesn't have to be like perfect like this. Okay. So the price actually came down from the above with the red candle, bounced on the way up. You see this green candle? After the somebody on a level two start. This is a red bubble. Is actually it's a buy market. They start selling here and sell. But those on a level two, on a passive order, they were what? They were buying, right? So somebody started buying here and protected the same price 1, 2, 3 times. So they were accumulating, right? So here's my point. When the price is kind of like on the way down, let's say, it's just like very close and kind of like for a play with this level, okay? Mingle with this level, around this level, touching it, coming close, not even maybe touching this particular plateau or particular level, but coming like 1 pixel, I don't know what pixel, 1 tick above or 2 ticks above, and still in the range over here. What's going to happen next? Could you tell me if the price gonna go higher after this or gonna go lower? Could you guys type if price is gonna go up or down? Jeez, which one? This one? Oh, drawing. This one. Oh, I click on this. Oh, drawing, paragraph, front, sides. I don't see freaking pencil. Okay. Sorry, I don't see the pencil. Uh-huh. Yeah, it's just a line. There's some drawing tools. The Microsoft give me a crappy version. Okay, just to download it. Okay, anyway. So now, look, guys. My point is, if the price is, you're seeing my mouse, right? Thank you for helping. Maybe I need to be really better prepared. If the price is kind of like a coming up and down, right? And initially, the whole momentum was from the up down. That was a reaction, and then we kind of hold over here. Now, here's what happens next. Price went through, then bounced it a little bit, and then really went through again. My point over here is actually, if I try to draw it over here, freaking PowerPoint should give me, no, it doesn't give me. Anyway, so my point over here, if you're seeing that price is kind of like nearby your price line that you have in mind, and it's kind of coming close with the short candles, that most likely it will go through. To compare with the previous one, you see this size of that extension, this is speed, okay? So the price will go through. Like over here, you see the price is kind of like up and down, and then it just went through. Imagine if your abnormal price level sitting right here, this is your abnormal price level, it will just melt it through. This is the same mechanics, okay? That's the same point I try to make. So, now that's one of the way that you can kind of like predict if the price will go through or not. There is some other points. I still need to put it on the slide. For example, when you're seeing, this is another rule, when you, and I've done it, I've recorded that as well on video. When you see that the price is kind of moving toward, like from above, down, from up, down, moving to your long order that you along with somebody on a level 2 and it's abnormal level, then what may happen if somebody remove somebody like okay, somebody remove this one. No, it's probably crazy. Somebody remove, let's say, one of this, okay? They remove, and you put your price to long over here, then what you do, you simply cancel, or if you have enough time, or you move it lower, or maybe completely cancel. So this is the management that when I see the levels, price levels that not abnormally large or big, then I kind of like, yeah, I'm not confident, then I will move away. So this way you kind of save yourself, especially you're not just a move because you are scared, but because you see how the price is approaching. If the price over here coming to this price level and it's like spending the time nearby this price level, I want to move my order out of here. If the price will come to this enormous level, what's this? This is 344, okay? On the MBO on the right side, it's a 344. But if price will come over here, not from the distance, not from the with extensions, but it will just like play with this level, coming close and a little bit above, a little bit like close again, I'm gonna move away my order, okay? Because I'm not confident. I'm not confident that there will be a reaction. So this method in particular, what we're talking about yet in the part 1, it is the bouncing. I'll call it the ping pong, right? So this is bouncing. And over here, there will be no bouncing from this level. There's no bouncing. We went above and then we kind of like, and then we simply melted this level and that's it. So there is a few things I added today. I know I should finish this presentation. I didn't get enough time. Sorry for this. Because there is some other cofactors we can put in place if you really wanted to. But let me come back to the same slide over here, and I'm gonna add some more complexity if you need the more complexity. Michael, I didn't get your question right. I don't know why. So now, since you're seeing my mouse, right? Now, the experienced people will trade this range on the way down. That's the first trade. Then they know the price is gonna bounce. They're gonna do long. That's the second trade. And then when this price will reverse nearby this range, it's most likely the price is gonna reverse nearby this range. If the price didn't go above this range, and it's kind of reversing over here on a tip of the imbalance over here, then you can short it as well. So how many deals could you do here? How many trades? You can trade down, you can trade a reaction, and you can trade down again. You can short it because if these people, that's what the beauty of the MBO. MBO tells us if there is a still people sitting here or they're already gone. If they're already gone, then I'm going to short it. I'm going to short it from over here. It is a short version. It's very simplistic version, what I'm telling you right now. But like if this is like becoming a very short candles and it's reversing on the way down, then I will short it again. If there's a nobody, that MBO tells me that there's nobody sitting here to protect any longer the same level. So there's a 3 trades. But you don't have to go to that kind of like a sophisticated way of trading, because it's common. It happens very, very fast, enormously fast. Okay. So the reason why I call it like 100% method, because I strip away all of these complexities and trade. Last week or last 2 weeks, I was trading only selectively reaction from the large abnormal level 2 and MBO price level. This is it. And I've get 100% one day, next day, next day, next day, and the next day. I'm like, dude, yes, you spend more time between the trades. You're not trading back and forth, back and forth. You select only the trades that you are confident, and that's how you're getting your experience. And then you're like, dude, I really surprised myself. You will surprise yourself. When you go conservatively and you trade only best perfect setups, that's a really good beginning. Now, Michael is asking how to minimize drawdown. So to minimize the drawdown, excellent question. To minimize the drawdown, because you see this distance, it's like a large distance. Okay, it's like about 30 ticks, right over here. No, I know it's 30 ticks because I traded. It's about 30 ticks. If the price is coming from that distance, usually it most likely will go through. Now we need to look at the bubbles. We need to look at the bubbles. If there is an extension, if there is a like the bubbles like here, but if there's a no bubbles like in this very beginning of that impulse, that means the price is just like flying in a vacuum. Flying in a vacuum. The more a vacuum over here, the more speed it's getting, and most likely it will go through this level. Most likely it will go through this level. Okay. So what you do, instead of putting your order above this large abnormal volume, you put 1 tick below, or you put 2 ticks below, or you put 3 ticks below, or you put what? Here we go. How many ticks below you need to put it? This is the chart. This is exactly the chart that I learned because by studying yesterday and 2 days ago, I studied that there's a false breaks, how often false breaks happens on the reactive volume 50 to 70, or how often false breaks happens on the abnormal 300 to 500. That's my record, okay? And I found, false breaks actually happens 2 ticks. It just like should be like 12, okay? 12 ticks over here. So I know, if I know how often the false break happens from my stats, then you will get the answer really well. Mm-hmm. Mm-hmm. Yeah, this is the ES for Asian session. But I put the numbers out of my, not because it was my research. I just put the examples. It's not the actual numbers. Okay. It's not my actual numbers. Okay. I just didn't get enough time to fill out this with my numbers. But if you don't do your own study, you're not going to be confident. You're going to rely on me. Okay. So don't copy the numbers though. It's just an example. Now, there is another parameter I want to. Now, there is another parameter, and I can say that you see this. The what's the order to the queue? Was the order to the queue? For example, I already kind of covered it a little bit, like on this slide. You see this large order sitting too far on the left. Okay, it's like sitting on the top. For example, market maker quite often gonna sit on top of this, and market maker usually flip a flip from one price level to another on top of the other orders. I don't. The further away this 50 from the queue, this is the queue, right? This is the execution line, right? This 10, order 10 is like what? It's actually sitting like second because there's a small kind of another one single order sitting right there, but it's right there. Okay. So the further away this large abnormal order size sitting on the left, the less I trust it because they can simply like they came and they leave at the same speed and maybe they are not that serious. But when I see that there's a bunch of small orders, like over here, there's a 11111. These guys with 21, they're serious. These guys with 21, you see this is 21, and you see the only like largest is 5 over here, but the all gray, it's a 1111111. So there's a 20, I don't know, individuals with the order volume 1 sitting over here. This order give me confidence, although it's not abnormal order price line, right? But it's more confidence over here than over here because there's like a 3 big dudes sitting and there's like a small dude sitting over here. Now, like over here, this is the 4, the volume is 4, and this order is closer to the execution, to the queue. And there's a more on top of this 25 with my Guyane kind of like a background. On the left, there's like a 10, 7, blah, blah, blah. There's a small ones over here in between. This level, this price order on this price line, 65, give me more confidence. Okay? Because it's closer to the queue than this big one. Okay? So I hope I cover it again second time. So the things is that there's a certain things when we look at them and we kind of do our homework, then you will be more confident than me many times. You will know. And exactly that somebody says that we trade what? We trade possibility. Yeah. Somehow my mic unmute and mute itself. Yeah. So thank you. So when I saw that you wrote that I kind of like my mic undone it. Even there's a special program for it, and it's still nice to tell me. So anyway, thank you, thank you. So did I cover the answer, by the way? So I trade a certain session, one session, a session again and again. So what happens when you trade many different tickers, instruments? You trade gas, you trade gold, you trade MNQ, you trade ES. What happens with you? Your brain is not capable to come up with a one large model because it has to be a large model. Yes? Are you talking to me or to somebody in your room? Are you talking between yourself? Do you want me to continue? Huh? Do you hear me now? Okay. Yeah. So anyway, so that the things. I mean, nobody can tell. I mean, what I was talking about. Yeah, what I was talking about. Oh, yeah. Yeah, guys. The breakthrough for me happens. The story that I love to repeat, and people say, "Hey, Oleg, you are so insane. You repeat it so many times." But out of the 150, 120 people sitting in the one group where I first start to make money, yeah, 120 people were trading all kind of the forex pairs, all of them. And I like, dude, I'm gonna do only one, one. And my eyes start to track one particular ticker. It was euro, dollar, only one, because I realized I'm not that smart like other people. I'm telling you seriously, one. And then when I start with my eyes bowling only on a one ticker, then your eyes will get used to the movement of that particular ticker and a market maker, because there's a different market maker sitting on each of those tickers or the forex pairs. And when you realize, oh, that's what this particular market maker is doing. Okay, then the charts start talk to you instead of you asking the charts, what do I see? The chart's gonna start talking to you. And I was one person out of this 120 people start making money with only euro and only shorting, only one direction, one ticker, and a same pattern. That's it. And people were like, dude, how is that happens? How is it happens that you turn in? I send them screenshots every single day, several times a day, and they saw me growing $1,200 into $34,000. They're like, it's absolutely insane. Why we don't make it? I'm like, dude, I'm telling you straight, if you are that smart and if your brain is capable to come up with a model it constructs out of so many signals you're getting from all these different tickers and all of these different charts, yeah, I'm not that smart. So one ticker, one direction, okay, one single pattern. And with that, when you're conservative, when you're not trying to trade back and forth, like I showed to you, instead of one trade, we can do three on the same spot. But try to limit yourself, like I limit myself last 2 weeks. Trade only one single system, only bouncing from the strong level on MBO and a heat map. This is it. If somebody tells me, hey, Oleg, you know what? We laugh at you. You're a joke. Yes. The only difference is in a bank account. I know that when you focus it, and focus is the is this, it is how we make, how we do it. The focusing, and I tell you the straight, guys. Yeah, you can tell me that I'm preaching to you. After you focus on a one single system without additional functions, features, cofactors for at least 6 months to a 12 month. You will understand that system so well. But prior to that period of time, if you don't spend your time, don't experience that long enough, you're going to jump from one system to another, one system to another, one system to another. And if I ask you, hey, could you tell me what system do you trade? You will not able to. You think you will, but most people will not able to follow 5 simple rules. And I know it because I have a bunch of students. Okay. I have it. Okay. So, Lorena, thank you very much. If you need my assistance with whatever you're doing out there with your machine IDs, so let me know. Okay. So anyway, I think I shared some pieces with you. At least when I finish it, I'm going to share it with all of you. It maybe sounds so simple for some of you, but I recommend you, whatever you do with this, it's up to you. It's your future. Okay. Thank you, Lorena. So anyway, what else I can help you guys with? What other details? Because that was a really awesome question. How do you know if the level will hold up? We never know. But the larger the distance between the range and the longer the extension or the impulse candle, then bigger the chance that your level will be broken through. That's the short answer